here with your next 4-minute drill for traders. We've been talking about the issue of being focused in your trading. And the way you need to be focused as a trader is to focus on your entry first. And once you're in a trade, you need to shift your total focus to the exit strategy that's in your trading plan. Once you've triggered yourself into a trade, you must put the entry phase of trading behind you. No double thinking, no lamenting about where you could have gotten in if you did this or you did that. You got to put it behind you. Once you're in, it's time to put full attention on exiting the trade with a profit or a reasonable loss according to your trading plan. Many of us like to trade multiple positions at a time. For me, as primarily a futures trader, I'll often say be in a gold trade. And since I trade from 30 or 60-minute bar charts, if my computer pings me with a setup in another market that's about to trigger, I can shift my focus to that market, say soybeans in this example. Now, the only way I can do that is because I use stops in my trading plan. When I put on a position, the first thing that I immediately do is to place my stop, and you should do that too. This does really three main things. One, when I place my stop, I'm setting my loss parameter. This, of course, is just a risk management move. Two, when I place my stop, I'm taking the pressure off myself. I'm limiting my risk. I can now relax, knowing that other than in very rare cases, I've limited my risk to less than 3% of my account equity, and that allows me to relax because I'm following my trading plan. And three, now that I'm relaxed, I can focus on the next phase of the trade, the exit strategy, and I can do that with ease and total intention. Now, the fact that I use the longer term time frame charts, the 30 and 60-minute bars, I usually have a period of downtime where I'm waiting for the trade to mature. During that maturity time, I can shift my focus again to the entry of that alternate trade I talked about before and let my stop work for me in my initial trade. I then execute the alternate soybean trade, place the stop immediately, and then make both the gold and the soybean chart in view, both of them in front of me. Now, on the chart, now I can focus on both trades. That's about my personal limit when I'm trading the 30 or 60-minute time frames, two positions. If I trade the daily chart, I can take on a third trade because there's a lot more trading maturity time, of course, in that kind of a long time frame. I don't usually trade in lower time frames, but I can tell you right now that if I did, say trading a 1-minute, a 3-minute, or even a 10-minute bar chart, I could only take on one position at a time. Some people can take on more. You got to judge. There's little downtime in these shorter bar time frames, and therefore the ability to fully shift my attention to the exit strategies are less assured. Unless I know that I can shift my attention in a relaxed fashion, I won't take on another trade. And you should think about doing that for you too. It never fails that when I'm focused on a trade that I've already got on, I'll get that ping from my computer that another market is ready for me to jump into. If I've already got two trades going, I can't take that third trade, and that's where more trading discipline comes in. No matter how good the new setup, I cannot take the trade. And sometimes I really need to muster up my discipline to stay within my rules. So discipline, very key when staying focused. But I've gotten very good at it because I've learned to train my mind on a daily basis, and I do that training before the trading day starts. And that gives me a nice, strong, focused mind going into my trading day. So I got a process. So for all of us, we need to look at ourselves in an honest way, understand ourselves, determine how we need to trade in order so that we can always assure ourselves that we'll be totally focused during our trading day. These are not parameters others can set for you. We are all different. We all have our strengths and weaknesses, and our personal trading plan needs to honor that. So inspect yourself first. Now, That doesn't mean we can't improve our current level of focus so that we can do more and be more effective. That's a matter of process, and we'll go over that process in the next 4-minute drill for traders that we'll go over next week. Are you enjoying this discussion on being focused on your trading? Do you think it's important enough for us to be spending the last 3 4-minute drills on focus plus the 4th next week? Let's hear your opinion. Take a moment and leave a comment below. And until next week, stay disciplined.